All right, welcome to today's show. So we're going to jump in. Strategy, pre-qualifying for the S&P 500. We're going to talk about that today. We're going to talk about strategies unrealized gains. We're also going to talk about future predictions for Bitcoin and the price point. And we're going to jump in and talk about Bitcoin treasury companies and how they are blowing away the ETFs right now. So stay tuned for more. We're going to jump in right now. But first, not financial advice, not tax advice, not legal advice in this video. So let's jump in and talk about what is actually going on. But first, let's hear a word from Saylor and what he has to say about Bitcoin.
And your immediate reaction is, because once you get Bitcoin and it clicks in your mind, your immediate reaction is, oh, I got to hurry and buy as much as I can because someone else is going to go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I got to do this in a hurry because someone's going to figure it out and the price is going to 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head. Because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion, or $5 billion or 10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right?
Good. So let's jump in and talk about the infinite money glitch. So the $14 billion magic trick strategy is likely to register an unrealized gain of about $14 billion in the second quarter. We all know that we saw strategy shoot up the other day right before the close of the quarter, and then it dropped all the way back down, and now it's shooting up today, and it's sitting pretty. So what does this mean? Bitcoin's price went up. Saylor's company owns tons of Bitcoin. That made their balance sheet explode with a $14 billion paper profit without selling anything, not selling their Bitcoin. And the new rules, the big wins, strategy adopted an accounting change that requires valuing Bitcoin at market prices. We know this is a new rule that's been put in for anybody holding Bitcoin on their balance sheet, which is cool. And so before, they had to count losses when Bitcoin dropped, but they couldn't count the gains. So it's kind of whacked out. It's like count the losses, but not count the gains unless you sell. And now on the balance sheet, they can show Bitcoin's real value on paper, even without selling it. So this is a big deal. The rule has changed and it's unlocked billions of dollars of unrealized gains for strategy. So strategy checks all the boxes for the S&P. They've been profitable over the last 4 quarters in terms of their unrealized gains. And they check all the boxes in terms of qualifying. We will know in September if they officially qualify for the S&P 500 because it will come to a vote. And then when they do, passive income rolling into strategy, billions and billions and billions of dollars, the potential of 14, 15, 20 billion dollars coming in. And over a couple months, once they get approved, billions of dollars coming in. So that's exciting as well. Pretty cool and game changer. Now, Wall Street has been laughing all along. What's up, Jeff? What's up, Remy? What's up, Marco? What's up, guys? So Wall Street's been laughing all along. You know, people have been trying to short the strategy, short the stock, and you got to say that Saylor definitely feels, I'm sure, vindicated, proud of himself. Anybody who owns strategy is like, good job qualifying potentially for the S&P 500 is no small accomplishment. It's huge. And so this is a round of applause and a big day that happened the other day. So experts like Jim Chanos, who was shorting the stock, said Saylor's plan was financial gibberish. But Saylor's company, as we know, crushed the S&P 500 and even beat Bitcoin's growth over the last year and also several years. So when you look at the performance of MSTR over the last 5 years, it's 3,335% in 5 years. Bitcoin, 1,065%. And the S&P 500 over the last 5 years has done 115%. So that's actually interesting because on the S&P 500, I'm used to doing about an average of 14%. So you look at the returns over the last 5 years, it's actually higher than that. But look at the comparison to MSTR and Bitcoin. There is no comparison. I think it's very hard to argue that Bitcoin, it is the new standard. And we will see this in a moment by the number of treasuries, the number of companies that are stacking Bitcoin in their treasury, and the number of companies that are springing up in the marketplace that are doing this, and the amount of Bitcoin that's being gobbled up by the Bitcoin treasuries, the companies that have Bitcoin on their treasury, is being gobbled up versus the ETFs. And companies are now outpacing the buys of the ETFs, which we'll see in a second. So we know that Saylor and the company of Strategy, they got a ton of Bitcoin by issuing stock, same old thing, issuing shares, common shares, using debt, borrowing money to buy more Bitcoin, and of course, their preferred shares of Stride and Strike and Strife that we're going to look at in a minute because they are crushing it as well. So this is the same thing I was just saying. They sell stock, they take loans, they issue preferred shares, all to buy more Bitcoin. And there are many other companies out there that are the copycat companies in a good way because they now have the MSTR playbook and they are putting Bitcoin on their balance sheet. So other companies have seen Saylor winning big. Now there's some companies that are talking about trying to do it with Ethereum and Solana and more. And we know that Strategy is the biggest, the boldest, the baddest, and kicking ass. So here's the division of ownership on Strategy between retail and also between institutions. Retail investors own approximately 48% of Strategy. And that means that everyday people, you and me, not just big institutions, own almost half of the company. So retail investors have a lot of power in this. And, you know, when times get tough, I don't know if that's a good thing or a bad thing, because if people don't have solid hands when things get shaky, retail might sell out and could cause a big dip in the stock, but we'll see. So ultimately, if MSTR wins big and goes up like I expect it to over the next 6 months, then a lot of retail investors can win big, and some people I'm sure will take profits. So I'm sure when Strategy hits its height, you'll have a lot of retail investors that will take profits, and I'm sure that will bring the stock back down, but we'll see how high it goes. So big institutions hold about 45% or so of Strategy stock. So you got big players involved. You got the Vanguards, you got BlackRock, and you got other giants who are money managers who are investing in MSTR. BlackRock owns, I think the stat is about 5.6% or so of Strategy shares. So they own a big majority of it. And they believe in Saylor's vision, much like many people do. I mean, I don't think we could have dreamed this up looking back a year ago to think that Strategy was going to be on the S&P 500. And certainly looking at this 4 or 5 years ago, did anyone think that Strategy would hit the S&P 500 at this point in time? I don't think anybody thought that. So big players like institutions, they trust this company. It shows by Vanguard and BlackRock's investing into this company. And they trust them because they stick to one very specific approach. And they keep doing what they say they're going to do. And that's why you have big institutional investors who are in the game and continue to invest in Strategy. Insiders have skin in the game. So the people inside with the company, they've got $7.7 billion worth of the actual stock. Saylor and his team personally own a big chunk of the company. And so that means that they're not just employees, they're investors too. And they have, you know, confidence in the stock as well. And if the company wins, they win. And there you have it. So Strategy now has 597,000 Bitcoin worth over $64 billion. And Saylor's not stopping. He keeps buying week after week after week. He's using a combination of his preferred stock, also common shares, and whatever he's got in the toolkit, he can pull out at any given time. So in 20 years, 10 years, I think, 5 years, people will wish they bought more Bitcoin. And that's the big question right now on the table. I was sitting around the table last night with a bunch of my friends, and we were sitting there and we were talking about Bitcoin. And, you're all informed on Bitcoin and Strategy, but you'd be surprised the number of people out there in the marketplace, just everyday entrepreneurs, business owners, successful people too. They don't understand what Bitcoin is. And they don't understand what Strategy is. And most of them have not even heard of Strategy. So when you think about how far Bitcoin has to go, although it's a mainstream word, the number of people who actually understand what it is and have confidence to invest in it is a small percentage of the people that I meet. And I hang around successful entrepreneurs. So last night I was sitting at the table with very successful entrepreneurs, and I was explaining to them what Bitcoin is and why it makes sense and where it's going in the future. And it was news to most of them. And it was fun to do because you get to share with great people what it is. And then I was sharing what strategy is, and that was a whole nother conversation as well. And then I have clients. I was on the phone with 12 clients at once today, and I was walking them through, and I was showing them and helping them understand, what Bitcoin is, what strategy is. And it's for a totally separate business that I have, unrelated to finance at all. I'm helping them grow their businesses. And as I'm talking to them, they don't know what Bitcoin is. They don't know what strategy is. So the fact that we have this knowledge and we have this information is just a huge, huge, huge advantage to the rest of the world and the rest of the marketplace that's out there. So stick with it, keep getting educated on it, because very few people understand or have even heard of strategy, which is pretty incredible. So this is just the beginning, and it's going far. So people will wish they bought more. And the big question is, when I talk with my friends, is it too late to buy in? Is it too late to buy in? Is it too late to buy in? If somebody's time horizon is 6 months, of course, I would say it's risky to buy in, because we could shoot up to 150 or a $200,000 Bitcoin, and we could shoot down to 60,000. We don't know what's going to happen. But long term, in terms of buying in, for somebody who's really looking at this in futures, which one should, my personal opinion, not financial advice, but as I was sharing with my friends last night, my personal opinion is it's not too late to buy in, because Bitcoin's the future and it's here. And to the degree of what companies are doing to stack Bitcoin on their treasury is just proof that the number of people who want to gobble up and the number of institutions that want to gobble up Bitcoin right now who understand it, it's a race. It's literally a race. And I'll show you some data on that in just a second here. So we look at being too late. I don't think so. Saylor believes Bitcoin will explode in value over time. He says, future, you will regret not buying more today. And his belief is one Bitcoin could be worth 13 million to 21 million by 2045. If you haven't seen that video by Saylor, you should go watch it. It's his prophecy that Bitcoin will hit $21 million in 2046. And the way that it'll get there is by growing at an average of 29% a year for the next 21 years. And when you think about that, if you look at the S&P and you look at the data that I just shared earlier, over the last 5 years, the S&P has done 110% cumulative. Strategy's done 3,300%, Bitcoin 1,000%. So if you look at those returns over time, you're like, is it hard to believe that Bitcoin would do 29% a year over the next 21 years? When you look at the S&P over the last 5 years doing 20%, that's not hard to dream up. Now, when people think every Bitcoin I don't own right now would cost me $21 million or $20 million approximately in 21 years, it's hard for people to go, wow, come on, dude. Like, if I don't buy a Bitcoin, it's going to cost me 21 million. But if you break it down to go, hey, look, take where Bitcoin is right now in its price, and do a compound annual growth rate of 29% or 30% for the next 21 years, and you'll see that you get a 21 million Bitcoin. $21 million Bitcoin. So a person who owns a Bitcoin today could have 21 million in the future. We're talking about retirement money, legacy money for people. This is a big deal. It's a big, big deal. And I can't remember the other person that I was talking to. I have so many conversations about this. Was talking about having money in the S&P 500 and having money in their IRA and their retirement plans. And I was just like, if you just look at the returns, I'm going to go back to this, because if you just look at the returns and do the math, like, to me, I literally think it's like financial negligence for an advisor not to recommend that somebody put Bitcoin in their portfolio. I think it's just the most ridiculous thing on the face of the planet for an advisor not to do that. But if you look at these returns and here, and you look at Bitcoin at 1,065%, and you look at the S&P of 115%. So it's like, okay, let's say somebody holds money in the S&P 500, for the next so many years, versus holding the money in Bitcoin. Just a small portion of their portfolio being put into Bitcoin could really help the returns of their portfolio over the next 20 years. So depending on somebody's knowledge and understanding and risk tolerance, I mean, you have to actually take that into consideration. It's not like everybody's great for, it's not like you can sit here and go, everybody should put all of their money into Bitcoin, because like one who has high knowledge and understanding of something, you can control it and might be, I got 50% into Bitcoin or 75% into Bitcoin or 100% into Bitcoin. So one who really understands it, like a Saylor who has, I would imagine, the majority of his personal money into Bitcoin as well, could have high degree of control over their decisions and feel good about it. But people who don't know much about it, who are relying on their financial advisor, should at least get the basic financial literacy to go, what is this thing? Why does it make sense? And literally walk them through and hey, do you understand what fiat currency is? Do you understand that the cash that you have is called fiat? Do you understand that the currencies around the world are called fiat? Fiat means by decree, by statement. It's worth something because the government says it's worth something. Do you understand that we were taken off the gold standard in 1971? So your cash is backed by nothing. So when you ask, how does Bitcoin have value? The better question should be asking, how does money have value? How does currency have value that you hold right now? How does the dollar have value? Ask that question to yourself. Because if you ask that question first, you'll come to the conclusion that fiat only has value because a government says it has value and the rest of the population agrees on it. That's it. That's why fiat has value. So now we've created a new system to go, okay, why you stack fiat, which is cash in the US, and you stack it up against Bitcoin and you do a comparison. You do a comparison, you stack, and you look at the properties and you sit down and you just educate somebody. And then the next question goes, well, what about gold? Because somebody asked me that literally on my call today. They go, what about gold? Would gold be a good option? I said, I'm not saying don't own gold. I'm not saying gold is bad. It's just the comparable magnitude of with Bitcoin, where you only have 21 million gold. There's 2% more supply every single year. So in 33 years, you lose 50% of the value of your gold. And then in the next 33 years, you lose another 50%. And the next 33 years, you lose another 50%. To the end of 100 years, you lost 88% of the value of your gold. So you do the math. Generationally, if you were going to plan for the legacy of your kids, of your family, if you're going to plan for whatever you want to plan for over the next 100 years, what would be the more sound investment? Just by the laws of math, just by the laws of properties that one could analyze: fiat, gold, Bitcoin. Like, just look at those three, because those are the most common things that people understand. You'll go straight. Then you can throw stocks and bonds into the mix, but I wouldn't throw them into the mix to start. Just look at them. You go, great. Does one understand this? Great. So where would you put your money, just based on the principle of scarcity, wanting something to be scarce, wanting it to actually be finite and worth something? And where would you want to put your money? Don't even say that it's Bitcoin. Let's not call this Bitcoin. Let's not call this gold. Let's not call this fiat. Let's just call the first column, it's worth something because the government says it's worth something. Do you trust that? Let's call the second piece of, like, it has value because it is scarce to some degree, but 2% more is mined every single year. So you're going to lose value over time for sure, 100% guaranteed. And the third one is there's only 21 million. And so it is scarce and it is finite, and you won't lose value over time. You'll gain value over time. Hey, math student in the first grade, which one would you choose? Any sane person who's logical would choose the third. So if you go through that comparison between cash and gold and Bitcoin, and you sit down with somebody and you want to educate them and teach them on it, people are going to go, well, of course I would choose the third. Great. So now all you got to do is break down the old beliefs, the old systems, the old traditional things that you bought into, and the old philosophy of 10% is going to get me ahead in the world. That's the first thing you have to break down. Like, you have to shatter that, because the idea that if you put your money in the stock market and you earn 10%, over the next 20 years or 30 years, you're going to retire well. If that was true, how come the majority of the world can't retire? If that's a true statement, how come the majority of the world can't retire? So you have to just question that premise and go, is 10% really good? Is 10%, is that really true that over time, if you did that, you could win? Because why isn't the world winning? So by that, if you analyze that, 10%, that's not true. It's not a true statement. And you can stack it up against, for anybody on the face of the planet, you can stack that up and you can look at it and go, great, over time, like if you have a 6.5% money printing, if you have inflation, if you have taxes, can 10% get you there over time? And the answer is no. Doesn't. So that's the conversation to have with people, which is the fun thing to watch. And it's a freaking amazing conversation to have, because I just had it with three different sets of people over the last 24 hours. And it's just adding value to the world to go, hey, just take a look at this, and people get it. they get it because finally somebody's explaining it to them. So experts like Jim Chanos, what are you thinking short and strategy? Come on, my man. Come on, huh? Right? And these returns are insane, man. Now, is that all to say the strategy is going to do 3,000% over the next 5 years? No, it's not to say that. It's just looking at the past and looking at where we've come and looking at data. Data is always good to look at. And I just lost my entire screen and I'm back. Okay. So we've got the combo of what Saylor puts in the marketplace. We already did this and I got to go forward here because I just went backwards. So let's go forward. All right. So the plan has been this, and this has been the plan all along, 84 billion. We all know that the plan has been 42 billion in stock, 42 billion in bonds by 2027. So they're basically, they're putting together their strategy to gain their war chest and grow their war chest of Bitcoin over the next so many years. And they got this $84 billion plan and they are crushing it. So it's a bold move and they are taking over Wall Street. And, I did this video, and this is not new data, but I did this video like a couple of weeks ago, but 11 out of 13 analysts recommend a strong buy for strategy. Experts on Wall Street are giving strategy a big thumbs up. Average price target, if you average them all together, including the people that are bearish on it, $535 would be the average price target, which is about 40% higher than it is today. Okay. Do I think we could go higher than 540? I think we absolutely could. And the reason I do is because we already hit that all-time high. After hours, we already exceeded 535. So I don't see that, like, if Bitcoin goes to 200,000 by the end of the year, which I think would be huge, and I'll show you a trusted banking institution that thinks that it's going to happen. I'll show you that in a second. But if Bitcoin hits 180, even if it hits 180, even if Bitcoin hits 150, I still think that strategy is gonna break through. Maybe not 150, 160. 160, I think strategy is going to break through all-time highs before that it had, which after hours was like 560 or 550. So we will see what happens. And I could be right. I could be wrong. We'll see. Companies are beating ETFs. And this is the big news of the day, guys. This is pretty freaking cool. Like, companies are beating ETFs at the Bitcoin game. So public companies grew their Bitcoin balance sheet 18% and ETFs grew only 8%. So what does this mean? In just one quarter, companies bought more Bitcoin than giant ETFs. That's huge. So the public companies that are adding Bitcoin to their balance sheet, 131,000 Bitcoin, and the ETFs bought 111,000 Bitcoin. That's 3 straight quarters of corporate domination. Sick, right? Sick. I mean, it's incredible, huh? Why are companies buying so much Bitcoin? They don't care if the price is high or low. They just want to grow their Bitcoin treasury. It's like a race right now to put Bitcoin on their balance sheet. Literally a race. It's a race to do it. Big investors in ETFs care about price swings. So this is an interesting comparison. So you have investors in ETFs that are looking about price swings. They're looking at, is Bitcoin going up? Is it going down? But public companies, they just want more Bitcoin no matter what. It's not about timing the market for these public companies. It's literally a race to get the most pristine, powerful asset on the planet Earth. And it's about stacking Bitcoin to grow their value as fast as possible. So it's just like a race. It's a gold rush, but it's Bitcoin rush. And it's happening, and companies are going in. Just by the data, you can see this. And I think there's 147 companies now that have Bitcoin on their balance sheet. And I just got news of another one today that's doing it. So it's unbelievable to see what's happening. And Strategy pioneered this. There's now more than 140 public companies. I believe the exact number is 147 that are doing it. And why are they doing it? Saylor started the trend. And it's interesting here to look at this, because what I said before is fiat currency is based on decree. It means decree. That's what their word means, statement. So the dollar has value because your government says it has value. And the world went into agreement with it. The dollar is the world reserve currency because the world, after the war, agreed on it, that the dollar would be the world reserve currency, because at the time it was backed by gold. And the fact that it was backed by gold, people were like, good, the dollar's strong, it's backed by gold. It's no longer backed by gold. And so it's just an agreement that's in place between countries around the world, an agreement that's in place by us and citizens of the United States, that the dollar and has value because fiat means statement, decree. I say it has value. So now you look at a new civilization, you look at a new world, a new financial era, and you look at somebody like Saylor, who's creating a new agreement in the world. And agreement is powerful. And when he put out the postulate or the decision of we're going to have 21 million Bitcoin in the future, a $21 million Bitcoin in 2046, he's creating a new agreement. and he's creating an agreement, but he's creating an agreement based on sound principles. As he posted in response to Elon Musk's tweet today, he posted that Bitcoin is about physics. It's about sound money principles, about math. It's about storing energy. So to think that Bitcoin could hit 21 million, I don't think anybody was thinking it before, but since Saylor put this out online, and he's spreading his vision of the future of what it's going to be, more and more people are going into agreement with this. More and more institutions are trusting what he says because he consistently follows through on the agreements that he makes. Week after week, week after week, he buys more Bitcoin. He does what he says he's going to do. He continues to do it. He buys more Bitcoin. He buys more Bitcoin. He buys more Bitcoin. It creates trust. Trust creates more agreements. Hey, we'll give you money. You say what you're going to, you say you're going to do what you say, you do what you say, and you say what you do, and you do it. Hey, we'll give you more money. Here's another billion. Here's another billion. More agreement, more agreement, more agreement. Puts the future there. 21 million, going to be 21 million Bitcoin. Before we were thinking 13 million. How many of you? 2 months ago, it was about 13 million. All of a sudden, we got this new prophecy of a $21 million Bitcoin. And what are futures created on? Agreement. Agreement. One shows up every day to work thinking they're going to lose, they're going to lose. One shows up thinking they're going to win, they're going to change the game, they're going to win. He's putting a future there that people can agree on a sound money versus fiat money that's agreed upon based on not sound money, based on very, 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 very unsound money that loses its value, that's trash. Okay? So this is the new future. Agreement, agreement, agreement. The more people go into agreement, which is why we spread the news, we tell more and more people, we educate more and more people on it, because it's not hard to go into agreement with something that you understand that's actually good for you. It's very easy to go into agreement with things that confuse you, and you're like, I don't understand, but because everybody else says it's okay, I'm just going to go do it. And that's the traditional financial system. All the terms, all the words, all the prospectuses, all the hidden fees, all the products and the derivatives, this form of that form of that form of that form, until you can't even get back to the source of money anymore. Now, if we just understand the fact that Bitcoin is the source and everything else that's created, Bitcoin treasury companies, they buy Bitcoin. Strategy, they buy Bitcoin. Governments, they buy Bitcoin. It's not hard to track the source. And the source of it is Bitcoin. And if you understand Bitcoin, then you understand the source and you can track it back to truth. The problem with our money system is it's just boiled down under so much misinformation, so many lies, that you can't get to the source and you can't get to the truth. And then when you do get to the truth and you really uncover, you're like, oh, this is not built on anything. And so that's why Bitcoin will dominate. And as Larry Fink says at the end, you'll see a post that he did on X. He believes that Bitcoin will be the world reserve currency. So pretty interesting, right? So that's what's going on in the world. So Saylor's kicking butt, 597,000 Bitcoin. Nobody's even close. You know, second place is Mara, nipping on their heels. And you got other companies that are behind as well. But and there's more and more companies creeping up, but nobody's going to catch Strategy. So why investors love these Bitcoin treasury companies? Simple. They issue securities and buy Bitcoin on your behalf. So it's just a different play. Like I can go buy Bitcoin in an ETF, and it's simple. If I'm a normal investor, I go buy some Bitcoin, no problem. But companies have all these different intelligent ways to create leverage, which means rather than in $1 to Bitcoin to buy Bitcoin, I can create $2 to buy Bitcoin. I can create $3 to buy Bitcoin. So I don't just use my dollar, I use your dollar and the next guy's dollar. And so now I have $3 to buy Bitcoin versus $1. It's just very simple math. It's not hard to understand when you just understand it from that perspective. Yeah, there's all kinds of ways that Strategy does it. We're going to issue stock to do it. We're going to borrow money to do it. The thing that's important to know is like 3 is greater than 1. So if I have $1 and I'm an individual, I can only spend $1. If I'm a company that has a crap load of assets on my balance sheet like Bitcoin, and I can go out to the marketplace and go, hey, I don't want to just use my dollar. Give me your dollar. Hey, I'm going to issue more shares. Buy my stock. I'll use your dollar. And they're using other people's money to raise money to buy Bitcoin. And it's been done for hundreds and hundreds of years. The only difference is it hasn't been done buying Bitcoin. And now it finally is. So if you invest in these companies, it's like they're stacking Bitcoin for you. And that's what's happening. And so they're becoming very, 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 very popular. So the ETF is strong but slower. Bitcoin ETFs hold 1.4 million coins, more than any group. ETFs are still the biggest Bitcoin holders overall, but their growth is slowing down. Public companies are catching up. So look at this. A year ago, we're sitting in a situation where the ETFs come on the marketplace and it's the biggest thing. And all of a sudden now regular people can go out and just buy Bitcoin. You can start buying your 401k and your IRA. People are just jumping in, buying Bitcoin. Financial institutions are behind it. They're pushing it. They're marketing inflows into the Bitcoin, into these ETFs to get Bitcoin. And we're watching the price of Bitcoin go up and up and up and up. And that took us to 100,000 or so. And now we're looking at the new game, which is companies putting Bitcoin in their treasury. And now we have the power of two. One's one, two's two. Now we got two forces going at it. And then we, of course, have the one organization that's literally leading the charge, which is strategy, just keeps buying, which influence the ETFs coming out, which influence other companies to go buy Bitcoin. And you have one man putting a future there to go, hey, this is the future. This is where we're going. And yeah, there's a lot of other parties involved, lots of other people involved in doing this, but you have a leadership here that's putting it there. And then other people are catching on going, we better catch up. And that's what they're doing. So it's a race now. And we don't just have one group racing, we have multiple groups racing. And this is a good thing. So it's a fun competition where everybody wins, which is a great thing to do, where everybody wins, playing a game finally where everybody freaking wins. Is that a good game? Finally, a game where everybody can win. This is a good game. This is good news. So Trump signed that executive order for a U.S. Bitcoin reserve. We know that's old news, but what did it do? New pro-Bitcoin policies, less regulation, more adoption. That's why more companies are jumping in the Bitcoin game. It feels safe now. It's now safe to go into Bitcoin. So it's good that we have these regulations. We want these regulations. These regulations are great because now it's safe for institutions to jump into Bitcoin. It's safe for institutions to get in the game and loan money to strategies. If strategy, you can keep buying billions and billions and billions of dollars of Bitcoin. So the game has become more safe, and now it's a race to see who becomes the wealthiest. Damn, it's good. It's a good time to be alive, isn't it? Huh? It is a good time to be alive. What's up, Meta Girl? What's up, Peter? So what's up, Remy? So this is just cool to see what's going on in the world, and retail versus institutional. Public companies want to increase shareholder value. ETFs are just gaining exposure. So when you look at this, companies equal long-term Bitcoin strategy. It's like building a treasure chest. So when you look at companies that are buying Bitcoin, it's a long-term strategy where they're building up their treasure chests. And ETFs are different because it's short-term price exposure. It's like renting Bitcoin for a while. It's not bad to hold an ETF. I'm not saying bad at all. It's a great way for people to hold it, Bitcoin, get the upside returns of Bitcoin. But we're looking at a very, very different game. Even though both have Bitcoin in them, companies that are putting Bitcoin on their balance sheet and putting it into their treasure chest, it's just two different games. And what these operating companies like Strategy and the other 147 companies can do is they can create all kinds of leverage to acquire Bitcoin faster and faster and faster and faster. So the rush may not be around for more than a few years with these treasury companies. The company buying Bitcoin craze might not last forever. Too many companies doing equals diluted impact. So, it's hot now, and it's a race to see how many companies can get in the game and do this. But at some point, I'm going to imagine that 2 years, 3 years from now, it's going to become more mainstream of companies putting Bitcoin on their balance sheet, and owning a company like that is not going to be as lucrative as it is right now. So it might fizzle out a little bit because more and more companies are doing it. But it's going to be hard to catch strategy scale. Strategy is a total freaking scale. And they've got deep liquidity. They have big trust from institutions, and they have tons of Bitcoin in reserves. And you look at their debt ratio, they've got like $10 billion worth of debt, and they got $64 billion worth of Bitcoin, maybe $11 billion worth of debt. All right. So they're not even close to a place to being over leveraged at all. Smaller companies offer more risk and reward, but strategy is the fortress. So, some people are running around and dumping their money into these smaller companies. And certainly if you got into MetaPlanet, you're like, wow, MetaPlanet, if you got in early, it went up thousands of percent, like 9,000%. And if you predicted that trade, you kicked ass. But I like to stick with my winners, which is why I'm in Bitcoin and strategy. I did buy one of the other Bitcoin treasury companies, but nothing worth writing home about. So here you go. Bitcoin stocks, the turbo version. Investors are using leveraged Bitcoin equities to try to outperform Bitcoin. So this is what companies are doing. And investors are getting involved with strategy because they want to outperform Bitcoin. And that's the game. So people want more than just Bitcoin gains. So they buy Bitcoin powered companies. That's why I own Strategy. I wanted more than Bitcoin gains. So when I bought Strategy in early 2024 of February, when it was at $79, I saw the future of where this was going, and I bet down on it, and it paid off. And other people are seeing this now, that this is still the future, and people are investing and it's paying off. But of course, you got to look at your risk tolerance, your appetite, what the future holds for you, and how much understanding you have in it, you know, how much you can handle the volatility of it. And when one understands that, it can be a sound decision. But of course, I'm not recommending this to anybody. All right. So Saylor, with this bold statement, he says Bitcoin is money. Everything else is credit. Everything else is credit. And that statement basically comes from the idea that when you have money in a bank, you don't technically own it. Like, they're holding your money for you. So you don't technically own it. But when you have Bitcoin and you hold it and you have it on your own personal wallet, you are the bearer of that. You're the carrier of that. You're the one who controls it. Pretty much everything else in the economy is credit. Make sense? If you have gold in your basement, you're the bearer of gold. But other instruments out there are promises to pay. They're credit. Bank holds your money. It's a promise to pay you back. If the bank goes under, they're not going to pay you back. They'll pay you back to a certain point, but anything over that, you lose your money. Make sense? So these are credit. This is the difference between credit and being the bearer of your keys. If you own Bitcoin, because you control it, you own it. Gold in your basement, you own it. If you have cash in your hand, you own it. The funny thing is, somebody gave me $5 the other day. I haven't held cash in my hand, I think, in like 8 years, but it's somewhere on my desk here. I don't even know what to do with it. I might light it up. Okay. So that's the story with what he means when he's talking about credit versus Bitcoin actually being money and being the bearer of your Bitcoin and owning it. So look at the preferred stocks. I mean, you've heard of Strike and Strife and Stride, and look at them. They're just crushing it in the marketplace, right? They're just outperforming. You've got a rate of return of 46% on Strike since it IPO'd. Is that insane? 31% on Strife, and on Stride is 6% since the IPO. Is that nuts or what? These are preferred stocks. Preferred stocks, man. Isn't that nuts? Look at that. I mean, it's like Saylor's got the Midas touch. Whatever he's touching is turning to gold here. And this from the Bitcoin therapists. Of course, we saw Bitcoin running up to $109,600 today. And let's get this baby to bust through, man. We are owed $120,000. I want $120,000 in July. Come on, we got to pop in July. August is typically not a great month, so we got to pop in July. Let's get this thing going now. Elon Musk posts, physics sees through all lies perfectly, and Saylor posts, Bitcoin is based on physics. There it is, Saylor jumping in. In the analog world, you call your securities when conditions improve. Calling your securities means buying them back. It means you buy them back, you take them back. And what he's saying, in the analog world, that's common, taking them back. In the digital world, you just scale them. You just scale them. And you're seeing how Strategy is scaling their Bitcoin, and they continue to scale. BlackRock, this is pretty freaking cool, guys. Check this out. BlackRock is now making $187 million annually on Bitcoin ETF fees, more than on its S&P offering. Bitcoin takes over Wall Street insane, says the Bitcoin historian. 187 million in fees on its Bitcoin ETFs. Pretty good. You think they're going to be pushing Bitcoin more? I'm quite sure they're going to be. Quite sure they're going to be. So just in, 1.1 trillion Standard Chartered predicts Bitcoin to hit $200,000 this year. Now, I don't know if this is a new thing, because I reported on this about 2 months ago, where they were calling it $200,000 Bitcoin. And I thought it was fascinating because they are more of a traditional bank. They have large clients, and they're a traditional institution in terms of finance. They have large clients. They have governments are their clients. They have very wealthy people that are their clients. And so they don't throw out these wild predictions very loosely. So Standard Chartered, maybe they put out another issue on this to say 200,000 again to make it known, but they did issue this out about 2 months ago. So maybe they're like, here it is again. And the world's next reserve currency might be code. we've got Larry Fink, BlackRock CEO, says Bitcoin will dominate as world reserve currency over US dollar. Pretty interesting, huh? So that is the weather and the sports. I think that we all know where this show is going. We know that to the top it is for Bitcoin, and it's just a matter of time of when. And I am hoping that this happens very, very soon. And we're going to hear from Saylor here because this is an interesting video for you to listen to right now, because he shares why he's so focused on his one strategy, even as these other companies are popping up. So here's Saylor.
Like in our business model, which is to be 100% Bitcoin. And so we will always buy Bitcoin. Bitcoin is our hurdle rate, and there are a couple of reasons for that, really almost three.
By the way, hurdle rate just means like the rate of return that they need to make for it to be worth it. So it's like if your rate of return is like, my rate of return is 10% for it to be worth me investing in something, it's got to be at least 10%. That's a hurdle rate. For Saylor, the hurdle rate is Bitcoin. We have Bitcoin is the standard for them. So for me, I look at it the same way. I'm like, okay, great. So over the next 20 years, I want to be doing 30% a minimum a year through Bitcoin. That would be my hurdle rate. So other people's hurdle rates are like, I got to get 6% in bonds and I'm doing well, because they don't understand the printing of money. They don't understand inflation. They don't understand what's going on in the world. And so they're like, if I earn 6%, I'm good. And that means it's worth it for me. But he's saying the hurdle rate for strategy is Bitcoin. It's like whatever Bitcoin's doing, that's their hurdle rate.
One, we want to be neutral because I want to help hundreds of companies, and I can't afford to play favorites, and I don't have enough time to be invested in just 3 of them. The second is all of our credit instruments we sell, those are all based upon a homogeneous credit risk. You're holding Bitcoin. Are there any complications? No. If I were to invest in 22 things, then there would be 25 pages of disclosures for each thing, and there'd be 250 pages of consideration. And I don't want to complicate the decision my investors make. I want to be hyper transparent. You know, if one of them were to work differently than Bitcoin, if it was better or worse, the company becomes opaque. And it becomes opaque, it's hard for people to understand and to trust.
I trust you all know this better than me, but I'm like a 5th grade vocabulary guy, so I had to look it up. Opaque is like you can't see through it. It's not clear. So he wants his strategy to be clear of what he's doing. And if you were to invest in other companies, he's like it's opaque. Like it's not, you can't see it. You can't see through it. It's very unclear. It's like Saylor's investing over here, and now he's investing over here, and nobody's clear on his strategy. So it's opaque. And he doesn't want to be opaque. He wants to be crystal clear of like, this is what we're doing, and this is why you can trust us.
Trust us. See, part of our value proposition is because you know exactly what we're going to do, if you disagree with it, you can short us with 20x leverage. And if you agree with it, you can go long with 20x leverage. And you could put on $1 billion bet that's good for 4 weeks. The last thing you want is for me to say, oh, we're investing in a new business and we're very excited. It might, you know, and it just screws up that guy's $1 billion bet and that guy's $1 billion bet. And now they're like, I can't trust the company. I don't know what they're going to do. I'm just going to sell. I don't want to play the game. So our job is to be neutral, Switzerland with regard to the ecosystem, and make everybody successful, but also to be laser-like in our business model, which is we're going to create equity, which is going to be levered Bitcoin. We're going to attempt to outperform Bitcoin with leverage. And we're going to create credit instruments that strip volatility and risk and performance off of Bitcoin. And we're going to keep doing it the same way. And I think all these other businesses are great opportunities for private equity investors, venture capital investors. They have other pools of capital that is not invested in Bitcoin. The way you could think of it is my $65 billion of Bitcoin is pledged to support the equity and to support the bonds and support the preferred stocks. And I need to make sure that pledge remains inviolable. And I need people to say, that's what they're going to do for the next decade. And if I believe that, then I will buy something and I will hold it for a decade or 20 years or 30 years. We want people to know what we stand for. And this is what we stand for, Bitcoin forever.
There you go. There's words of wisdom here from Michael Saylor. So pretty cool. Always nice to hear what he has to say. Hope you guys enjoyed this video. And Mike, if you want, Mike was asking what the heck is a short call. I'll give you just a very fifth grade definition that I can read you here. You sold someone the right to buy a stock from you at a certain price, hoping the stock doesn't go up. Okay, to answer your question. All right. So there is the day in recap. Here's the things that we covered. Strategy over the last 5 years has done 3,000+%, 3,335. Bitcoin has done about 1,065. The S&P 500 has done 115%. Number one. Number two, the inflows of what's going into Bitcoin treasury companies in the last quarter is larger than what's going into the ETF. So now you have two forces in the marketplace. ETFs are promoting out there, gobbling up more and more investment money into their Bitcoin ETFs, and more inflows are going in, as we know, and they have been for a year. But the treasury companies that are putting Bitcoin on their balance sheet, that are continuing to stack Bitcoin, they are buying up more Bitcoin in the last quarter than is actually going into the ETF. So this is very, very big news. And now we have like two very bullish forces or bullish groups going into the marketplace to actually acquire more Bitcoin. Hence the prediction of certain companies that we just looked at that are predicting a $200,000 Bitcoin. All right. So now we have that. And then the third thing to look at on this is also the idea of what Saylor's putting out there in the marketplace of his $21 million prophecy. He's creating a new group agreement with people all across the planet. And he's basically saying, we thought $13 million Bitcoin before. Now we think in 21 years, we're going to look at a $21 million Bitcoin. And that's a 29% or 30% growth rate over the next 21 years to create a $21 million Bitcoin. If people don't believe that, it's hard to believe, it's hard to fathom, it's a large number. Just do the compound annual growth rate at 29% a year and you'll get the number. And to stack it up and look at the S&P doing 20% a year over the last 5 years, and they say that Bitcoin would not do 29% over the next 20 years, I think it's hard to believe that Bitcoin's not going to beat the S&P. Will it do 29%? Maybe. Will it do 20%? I think that's a layup. Okay, I think that's a layup. So that's my personal opinion on it. So there you have it, that. And then finally, if you look into the marketplace of the group agreement that he is creating, he's creating a new money system through a group agreement. Now, of course, Satoshi Nakamoto created Bitcoin and gave this gift to the world. But now you have somebody who's leading pretty much a decentralized movement with Bitcoin and is leading the way by putting confidence into the marketplace, putting consistency into the marketplace, saying we're going to buy every single week and doing it, and gaining the trust of large institutions in Wall Street who are now backing these principles, not to mention the governments around the world backing these principles. And you have this effect that's being created by a future continuously put there by one man and other people who are part of the party, but he's certainly leading the way. So it's pretty powerful to see how that's happening. And then additionally, the final piece to look at is the moves on strategy and what's happening with the S&P 500. They're ending the quarter with about a $14 billion unrealized gain. It's a big move. So they do pre-qualify for the S&P 500. Will they be accepted in September? That's exactly when we'll find out, in mid-September. And the moment they are accepted within that week, you're going to start having inflows come into the S&P from the S&P 500 into strategy. And we're talking billions and billions and billions of dollars, and perhaps $15 to $20 billion over time. So that is a good inflow from an index. I think the S&P 500 has $7 trillion in it. So getting a little share of this flowing into strategy is a big deal for the company, and it will continue to boost sentiment. And I like it, and I think it's perfect timing. And I can't imagine that they would say no. If they would say no, I think there would be hell raised in the Bitcoin community and the strategy community across the planet. But if they were to say yes, it's really good timing running into September, October, and November for Bitcoin, what we hope to be a run up. And it's good timing because strategy could run up as well and increase more confidence in the marketplace. So there you have it. I hope it serves you. I hope you guys have an amazing rest of the day and have fun with it and enjoy it and spread the word to your friends and just educate them on what sound money is, Bitcoin. Okay. Cheers. Talk to you soon. And I'll see you on the next show.